Are you operating your business as a sole trader and would like to know how to convert to a limited company? Well, stay tuned to find out. Hi there, Nicholas Campion here from First Formations, the UK's leading company formation agent. Setting up as a sole trader is the simplest way to start and run a business in the UK, making it the go-to structure for many self-employed individuals. However, the tax benefits and financial security of a limited company lead many people to consider converting from sole trader to limited company. In this video, we explain the process involved in converting to a limited company, whether it is worthwhile doing so, and the cost of setting up and maintaining a limited company. There are several steps involved in converting an existing small business from sole trader to limited company. The complexity of this depends on a variety of factors, including the transfer of business assets, the third parties you need to notify, and the extent of administrative updates that you need to carry out. We recommend seeking professional advice and guidance from an accountant on the tax implications of making this change. So, let's get started with step 1, register a limited company. The first step is to register a company limited by shares. The easiest way to set up a company is through an approved company formation agent like First Formations. It's an incredibly straightforward process that you can carry out entirely online, with most applications approved by Companies House, who are the UK Registrar of Companies, in just a few working hours. To register a limited company online, you will need a unique company name, a registered office address, at least one standard industrial classification code, also known as an SIC code, to describe the nature of your business activities, at least one director and one shareholder, details of every person with significant control, also referred to as PSC, and a set of articles of association. The same person can be both a director and a shareholder. Therefore, you can set up a company on your own by naming yourself as the sole director and sole shareholder. In this situation, you would also be the only person with significant control in the company. Consequently, you would have full ownership and control of the business, just as you do a sole trader. Limited company names are subject to more rules and restrictions than sole trader names, so you must adhere to strict guidelines. If you wish to register your existing sole trader name as a company name, use the free company name checker on our homepage to find out if it's available before you begin the application process. Our company formation checklist provides a detailed overview of the information required to set up a company. You can find a link to this document and other useful sources of information in the description below. Next up, we have step 2. Tell HMRC that you have decided to stop being a sole trader. When your company is set up and you're ready to start trading through this new business structure, you must tell HMRC that you are stopping self-employment and will cease running your business as a sole trader. To do this, you will need to sign into your HMRC account and provide the following details on the Stopping Self-Employment online form. Date on which you stopped being self-employed, your unique taxpayer reference, national insurance number, name and date of birth, present address and previous address, and nature of trade, that being your sole trader business activities. You will also need to send a final self-assessment tax return as a sole trader. The income that you report on the return should include your self-employed earnings and tax liability up to the date on which you stopped being a sole trader. You may also have to include allowable expenses, including any costs involved in converting your business structure, capital allowances on any sole trader assets transferred to your limited company, and capital gains tax on any business assets transferred to the company. You must ensure that you file your final tax return and pay any tax that you owe by the usual deadline of the 31st of January, after the end of the tax year to which the return relates. Moving on to step 3, transfer your sole trader business to the new company. Depending on the nature of your sole trader business, You may have to transfer your existing business assets, such as property, machinery, equipment, inventory, etc., to your limited company. Since the company is new, it is unlikely to have available funds to pay for those assets. And in this situation, the most common approach is to create a director's loan account, whereby the company pays you as the director over time for the transferred business assets. Transferring certain assets may trigger capital gains tax liability, or CGT. This will be based on the current market value of the assets at the time of the transfer. However, depending on your specific circumstances, you may be able to reduce or defer CGT by claiming some form of tax relief, such as incorporation relief, business asset disposal relief, formerly called entrepreneurs relief, or holdover relief. Transferring assets can be a complex matter for some businesses, so we advise speaking to an accountant for expert help and advice. Next up, step 4, set up a business bank account in your company name. There is no legal requirement for sole traders or limited companies to operate business bank accounts. However, it is best to keep business and personal finances entirely separate at all times. This is particularly important when you're running a limited company because all business income legally belongs to the company until it is transferred to you as a salary, a dividend payment, reimbursement of expenses, or as a director's loan. Aside from minimizing the risk of accidentally spending company funds on personal expenses, operating a business bank account makes it easier to maintain accurate bookkeeping and accounting records. At First Formations, we're partnered with several leading names in the UK banking industry to offer our customers an excellent selection of business bank accounts, including Barclays, Card One, TSB, Metal, Anna, Revolut, and Cash Plus. These accounts are available to customers during the online company formation process. The next step is to notify all stakeholders about the change in business structure. Regardless of whether you register a new company name or keep your existing business name, you'll have to tell certain parties that you are changing the legal structure of your business from sole trader to limited company. The various stakeholders that you may have to notify include employees and contractors, customers and clients, suppliers and service providers, banks, lenders and other finance providers, landlords and debtors. This minimises any risk of confusion or voiding of contractual agreements and ensures that all paperwork and invoices contain the correct details. You'll also have to update your own business stationery and website with your full company name, registered office address and company registration number. And finally, step 6, register your limited company name for tax and PAYE. When you incorporate your new company, Companies House will inform HMRC. You will then receive a letter from HMRC which will contain your 10-digit company unique taxpayer reference and information about your tax and reporting obligations. This will be delivered to your registered office address, usually within about 2 weeks of your company being formed. You must register for corporation tax online within 3 months of starting to trade through your new company. Thereafter, you'll be required to prepare a corporation tax return each year and pay corporation tax on your company profits. If you expect your VAT taxable turnover to be more than £85,000 within a 12-month period, you must also register the company for VAT. If your sole trader business is already registered for VAT, you may be able to transfer your existing VAT registration to the company. Voluntary VAT registration is also an option. To receive a director's salary and pay your employees, if you have any, you will also need to register the company as an employer and set up pay-as-you-earn or PAYE before the first payday. You can choose to operate PAYE yourself using payroll software, or you can appoint a payroll provider to take care of this for you. So that's how to change from a sole trader to a limited company structure. Now let's take a look at how much it costs to set up and maintain a limited company. Companies House charges a small incorporation fee to set up a limited company. At First Formations, we offer online company formation from just $12.99, which includes the Companies House incorporation fee, a ready-to-trade limited company incorporated at Companies House within 3 to 6 business hours, subject to the registrar's workload on that day, expert help and advice and guidance throughout the company formation process and beyond, all company registration documents, including a certificate of incorporation, share certificates, a memorandum of association, and articles of association, statutory company registers, which are legally required, and a free business bank account. Additional services, including a London registered office, service address and business address, VAT and PAYE registrations, a confirmation statement service, and much more can be found in our all-inclusive package at the discounted price of £99.99. The only statutory cost of maintaining a limited company is £13 a year, which you must pay when you file an annual confirmation statement at Companies House. You will also need to file annual accounts at Companies House 21 months after your company has been formed, and then every 12 months thereafter. For HMRC, you must prepare a company tax return and accounts every year. Whilst there are no filing fees to pay here, you may wish to hire an accountant to handle your company tax affairs. This would be particularly beneficial if you do not have sufficient bookkeeping and accounting experience, or if your business finances are complex. The typical cost of using an accountant ranges from about £715 to £1,500 a year for the preparation of accounts and tax returns. This may seem like a significant sum, but it's a small price to pay for financial peace of mind. Finally, let's consider the question, is it worthwhile converting from sole trader to limited company? Now, there are a great many benefits to setting up a limited company, which we've highlighted earlier, making it a worthwhile decision for many people. However, it's not just a one-size-fits-all structure, nor is there a set point at which converting to a limited company becomes a necessity. Often changing from sole trader to limited company is simply a matter of personal choice. Ask yourself the following questions to decide if it's right for you. Will I pay less tax and receive a higher take-home pay through a limited company? Will the prestige of a limited company help me attract more clients and grow my business? Would I benefit from limited liability protection if my business were to fail? Do I want to bring in business partners or attract investment at some point? And are these benefits worth the extra administration and filing requirements? Your choice of business structure very much depends on your circumstances and what you are comfortable with. If you are unsure about the best course of action, you should consult an accountant for expert guidance and tailored advice. So there you have it. When deciding whether to change from a sole trader to limited company, there is a great deal to consider. We hope this video has highlighted the pros and the cons of both business structures and helped you determine which one is best for your particular circumstances. If you have any questions, please leave them in the comments section below and we will get straight back to you. And in the meantime, we have included several useful links in the description below about how to form a limited company and tax administration matters. Finally, be sure to subscribe to our channel to get more tips and advice on limited companies, reporting requirements, tax obligations, and more. We're always happy to help and we can't wait to hear from you. Until next time, cheerio.